Good morning, good evening, good afternoon, wherever you are in the world. It is our trades here, back with another video. Before we get into the video, guys, if you would like, comment, and subscribe if you want to support this channel. Also, in addition to that, guys, you can find my affiliate links to American Express Blue Cash Preferred, Apex Trader Funding, and Topstep Trader Funding, with which, if you are not familiar already with, these are prop firm accounts that you can trade and potentially earn real money at a reduced rate using a simulated test account. All right, guys, so it is Wednesday, June the 12th, 2024. I'm going to discuss some of our news headlines as well as have a look at some of the charts for our major futures markets, starting with a Reuters article here on the Euro USD. And we're going to talk a little bit about the Consumer Price Index and some of the Fed news that came out today, and talk about some of the news articles and what some of the professionals are expecting for the market ahead. This video should take no longer than 8 to 10 minutes, so this is your brief recap of the futures markets for Wednesday, June the 12th, 2024. And we're going to look at some articles, look at some charts. If you like this content, guys, make sure to like, comment, subscribe, and use the affiliate links in the description box below. Okay, guys, this first article comes from Reuters, and it's titled Comment U.S. Recap, Euro USD Rise on Soft CPI Tamed by Hawkish Fed Hold. And the key points: USD JPY recovers from CPI slide on hawkish Fed, BOJ, and sales data now eyed. AUD USD bulls charge after CPI, and Fed's SEP gave bears some life. GBP USD retest 1.28 as Fed raises bar to pre-election rate cut. And the article goes on to read, the dollar tumbled in response to unexpectedly weak U.S. CPI data, but found some support after the Fed trimmed its 2024 projections for policy easing this year to just one cut and raised its estimated year-end inflation and neutral rates. The confusion between the softer CPI and hawkish hold left futures still largely discounting cuts in September and December. Two-year Treasury yields halved their 16 basis point post-CPI drop, contributing to a dollar recovery. The CPI report sent Euro USD up to 1.0852 before backing off to a 0.6% gain on the Fed's more hawkish forward guidance and Fed Chair Jerome Powell's caution about easing. The softer inflation data followed to Friday's surprisingly strong non-farm payrolls and average hourly earnings that sent yields and the dollar higher. Markets have become reactive to each new set of economic data, in part because the Fed itself has said it needs more data to be reassured inflation is sustainably receding toward its 2% target. Two-year Treasury yields fell to their lowest in 10 weeks, more than erasing gains that followed the jobs report before recovering. But the dollar index's 0.6 fall failed to reach Friday's lows because yields also fell elsewhere. However, risk-sensitive currencies such as sterling and Aussie did briefly overtake their losses from Friday, as tumbling yields boosted risk acceptance. And then reading past the USD JPY blurb, the focus now that turns to Fed speakers to get a better sense of where policy might be headed, and U.S. retail sales on June 18th to gauge the strength of domestic demand. Powell pointed to strong consumer demand as a reason why rates don't need to be cut now. And let's have a look at some of our other news headlines today. Treasury yields decline as U.S. inflation cools and Fed market hold. That is from Market Talk. That's from Dow Jones. And let's have a quick read of that. Treasury yields decline as U.S. inflation cools and Fed holds. Market Talk. And this is from a few hours ago. Treasury yields decline on cooler than expected U.S. inflation and recover slightly after the expected Fed decision to hold rates. In the hours after May's 12-month inflation was reported at 3.4%, down from April's 3.6%, the 10-year yield lost 0.128 percentage points, its biggest one-day decline since December. But after Fed officials projected only one interest rate cut this year, yields recovered a bit. The 10-year yield ends up losing 0.108 percentage points to 4.294%, and the 2-year declines 0.084 percentage points to 4.748%. May PPI tomorrow is expected to slow to 0.1% from 0.5%. In a Wall Street Journal survey with weekly jobless claims slowing to 225,000 from 229,000. Okay, and then reading a little bit here about gold. Gold got a boost this morning following the release of the tame CPI report, but those gains were paired following the Federal Reserve's decision to keep interest rates unchanged this month. Cuts to the interest rate will be beneficial to gold, says Robert Yager of Mizuho Securities USA. Quote, once the Fed starts to chop away at the highest interest rates in years, gold will likely be one of the biggest beneficiaries, free to assume its traditional role as safe haven of choice versus the diminishing role of interest-bearing financial instruments. Gold futures closed up 1.2% to 2,336 an ounce, while S-Spider gold shares have trimmed gains and are up just 0.2%. All right, some of our other news headlines. Treasury yields decline as U.S. inflation cools, Fed market holds. And then let's see if we have any other interesting headlines here. Nat, as in natural gas prices, retreat on expectations for U.S. gas supplies to remain elevated. Let's have a look at MT Newswire's daily roundup of key U.S. economic data for June the 12th. The Consumer Price Index held steady in May and was up 0.2%, excluding food and energy prices, both below expectations. The year-over-year rate of increase slowed to 3.3% from 3.4% in April, while the core measure was up 3.4% year-over-year after a 3.6% rate in the previous month. Food prices rose 0.1%, while energy prices fell by 2%. Gasoline prices were down 3.6%. Owner's equivalent rents and regular rents both rose 0.4%. The categories account for a third of the overall CPI reading. Prices of new vehicles fell 0.5% after a 0.4% decline in the previous month, and apparel prices slipped 0.3% after a 1.2% gain. And let's see, total crude oil inventories rose 4.1 million barrels in the week ended Friday, with commercial oil inventories up 3.7 million, and stocks in the U.S. Strategic Petroleum Reserve up 300,000 barrels. Gasoline inventories and distillate inventories both increased. The U.S. Treasury reported a $347.13 billion budget deficit in May, larger than the $240.35 billion deficit reported in May 2023, due to much larger outlays that were partially offset by higher receipts. Okay, guys, let's see if there are any other interesting headlines. All right, I'm not seeing anything else super interesting. Let's go to our gainers and losers on the day. I'm making this video 2:44 Central Standard. That's 3:44 New York local time. Silver futures are up to 29.655. That is our greatest gainer on the day, right next to the Russell 2000. Looking at our 30-minute chart, we can see that the silver futures hit a high intraday today, a high of 30.355. We've since paired those gains. We've come off the gains, and we're now trading at 29.655. Silver maintaining its 1% or about 1.45% gain, but off of the session highs. You can see that the market is currently trading below on a 30-minute chart, below that 20-period simple moving average, and trading down towards the lower Bollinger Band. Greatest loser on the day is natural gas. Natural gas is down to 3.039. That's down 2.88%. And that from bar chart, nat gas prices retreat on expectations for U.S. Gas supplies to remain elevated. All right, guys, let's have a look at some of our indices. We can see that the Russell 2000 is up over 1.4%, although we're coming down on this 30-minute chart, now trading at 2,056.4. On the NASDAQ reached a high of 19,588.75. Let's have a look at this article from Reuters. Indexes pair gains slightly after Fed statement. Key points: May CPI data unexpectedly flat. Oracle up on double-digit fiscal year 25 revenue growth forecasts. And the article goes on to read, the S&P 500 and NASDAQ trimmed gains slightly, and the Dow turned down a bit a bit lower after the Federal Reserve projected only a single quarter-point reduction for the year. Also, the U.S. Central Bank in its policy announcement left interest rates unchanged as expected. The Fed is acting like a CEO, sandbagging rate cut expectations. Let's see if I can get that off. Down to 1 or 2 cuts, but likely going to beat them later this year with 2 or more, said Gene Goldman, Chief Investment Officer at Cetera Investment Management in Los Angeles. The Dow Jones Industrial Average fell 7.4%. The S&P gained 51.47 points, and the NASDAQ added 293 points. And let's see, stocks were already rallying earlier in the day after a Labor Department report showed the Consumer Price Index was unchanged on a monthly basis in May, when it was expected to rise 0.1%. And on an annual basis, inflation rose 3.3%, less than economists' expectation of a 3.4% increase. After the data, traders boosted bets the Fed will cut rates by September. Traders also added 2 bets on a second Fed rate cut by December. And let's see, advancing issues outnumbered decliners on the New York Stock Exchange by a 4.21 to 1 ratio. On NASDAQ, a 2.26 to 1 ratio favored advancers. The S&P 500 posted 38 new 52-week highs and no new lows. The NASDAQ Composite recorded 95 new highs and 57 new lows. So as we can see here on the chart and as reflected in that news article, the NASDAQ as well as the ES futures have come off their highs. The ES futures reached an all-time high today of 5,454 halves, or 54.54 spot 50. We are currently now trading at about that 54.26, 54.27 level, so we are coming off of today's highs as we come into the close. And that would be on that news that a little bit of hawkish comments from Fed Chair Powell. And all right, let's have a look at crude oil. Crude oil is currently trading at 78.28, below that 20-period simple moving average, coming off of today's Wednesday's session highs at 79.31. So oil coming down as, let's see, crude settles higher on dollar weakness and strength in stocks. Oil shakes off U.S. stock build, bearish IEA, hawkish Fed. We can see that the crude oil is actually now, as we come into the futures close, the crude oil futures are coming back down. All right, let's have a look at the dollar index. Dollar index traded sharply lower today on that CPI increase, but we have since paired some of those losses, and we're now sitting at 104.69. The dollar has, let's have a look at our daily chart. The dollar is trading right around that 20-period simple moving average, so right around its average price at 104.7, but coming off of Tuesday's action on that CPI release. Okay, guys, finally, let's have a look at the 30-year Treasury futures. And 30-year Treasury futures are coming down, and that headline is U.S. yields lower after inflation data, Fed rates hold. So, all right. Let's have a look at the Euro futures. Euro futures are coming back down, sitting right at that 30-minute, 20-period simple moving average. Okay, guys, and finally, Bitcoin, 67,650. Bitcoin is now trading sharply lower as we come into the close. And let's have a look and see if we have any crypto news. Here's what happened in crypto trading. Well, apparently Trump is a fan of made in the USA crypto. I'll look at our futures news, see if we have any news there. Hogs climb as Focus moves to quarterly report. Energy update, NYMEX Platinum. Cocoa prices settle sharply higher on fears of a prolonged supply shortage. Corn basis higher, soybeans mixed on demand questions. You can see that corn futures are up over 1% today. Silver futures are up, and copper and gold futures are also up. Hog futures were pretty much unchanged. Slightly down in soybean futures, and wheat futures were down over 1.5%. Wheat sags on uncertain demand outlook. Corn firm, soy sags. Okay, guys. Yeah, Bitcoin trading sharply lower. I'm not sure exactly what the news is on Bitcoin, but see if I can find any news articles on crypto. Do Kwon's crypto firm agrees to pay massive $4.5 billion penalty to SEC. And I think on that headline, the Bitcoin market has traded sharply lower on that headline. Okay, guys. With that being said, I appreciate y'all coming with me here through a futures market recap for Wednesday, June the 12th, 2024. I hope you've enjoyed this video. If you like this content, please make sure to like, comment, subscribe, and use the affiliate links in the description box below. That is the best way to support me and this channel. Thank you for your attention, and I hope to see y'all very soon. Bye-bye now.